Namaste, traders. Welcome back to the channel. If you've been watching the MCX Silver chart this past February, you already know it has been one of the most turbulent months for this metal in recent memory. So today, we're going to sit down, pull up the charts together, and break down exactly what happened in that move from RS 3.215 Lakh down to RS 2.85 Lakh per kilogram. We'll look at the MCX trend, dissect the dollar's role, and then we'll observe what the data is currently suggesting about next week. Let's get into it. Screen, pull up MCX Silver March 2026 daily chart. All right, so I'm on the MCX Silver March 2026 futures daily chart right now. What you're seeing here is a market that started February near the Rs 350 Lakh level. That was February 1st, riding the tail end of what was an extraordinary January 2026, when silver hit an all-time high of R4 10 Lakh per kilogram. That peak, by the way, came on January 28th. And from that high, the slide has been relentless. Now, the specific zone we are studying today, the Rs 3.15 to our 85 Lakh range. That's where many active traders had their positions live through mid to late February. This is the range that saw some of the most intense action. Screen, zoom into Feb 626 segment on chart. Let me walk you through the structure here. After the initial budget day crash on February 1st, which alone saw MCX Silver fall over $145,000 in a single session, prices attempted a small recovery. But by February 6th, MCX Silver was back under Rs 2.50 Lakh, with March futures hitting lows around Rs 2.42 Lakh. From there, the market bounced, and by mid-February, prices crawled back toward Rs 3.15 Lakh. This was important, that Rs 3.10 to Rs 3.15 Lakh region had emerged as a supply zone. Every time price attempted to push through there, sellers came in heavy, and on February 19th, when silver was unable to sustain above that zone, the next leg of selling began. Screen, mark horizontal resistance zone at Rs 3.10 to 3.15 Lakh. This is the area I want you to notice. See how price tested this zone twice and rejected both times? From a pure price structure standpoint, that ceiling held. And what followed was a measured move down to the Rs 2.85 Lakh support zone, which also happened to align with where physical market prices were being reported on February 26th and 27th, right here in a narrow consolidation band. That multi-day congestion near Rs 2.85 Lakh tells us this level had meaning for market participants. Screen, switch to dollar index, USD INR chart side by side. Now here's where the picture gets interesting. Let's bring in the dollar. Open up DXY, the US dollar index, alongside the USD INR pair. And what you'll observe is that the dollar index moved above the 97 level during the same period in February. And at the same time, USD INR was trading near the Rs 90.90 to Rs 91 range, a relatively firm rupee, but still elevated enough to keep import costs high. And when DXY strengthens, silver, which is globally priced in dollars, immediately faces headwinds because foreign buyers find it more expensive and speculative demand contracts. Screen, overlay DXY versus MCX. Silver price, show inverse correlation. Look at this overlay. When DXY spiked above 97 in the first week of February, MCX Silver dropped sharply. When DXY pulled back slightly later in the month, it came down toward the 97.5 range by February 26th. Silver found its footing near Rs 2.85 Lakh. That inverse relationship is something every MCX trader needs to have on their screen. It's not speculation. It's the mechanical plumbing of how commodities priced in dollars translate to rupee-denominated futures. When the dollar weakens by even 0.5%, silver gets structural support. When it firms, the selling pressure in MCX Silver accelerates. Screen, back to MCX Silver chart, annotate key levels. Now let's layer in the macro backdrop that was driving all of this. The Federal Reserve's stance in February was clear, hawkish. The nomination of Kevin Warsh as the next Fed chair sent a strong signal to markets that the era of aggressive rate cuts was being repriced. Real yields moved up by nearly 40 to 50 basis points over just 7 days in early February. And silver, historically, has shown a beta of roughly 2.5 to 3 times the movement in real yields. That's why you saw such amplified moves in silver versus gold during this period. Add to that the CME Group's margin hike of approximately 36% on silver futures. That single action forced hundreds of highly leveraged positions to unwind instantly, and the cascade of stop losses created those massive single-day candles you see on this chart. As screen, point to the large red candles in early February. This was not a fundamental breakdown. Industrial demand for silver never disappeared during this period. Solar, EVs, electronics, those structural demand drivers remain intact for the decade. What you witnessed in February was a structural crash, a leverage unwind. The paper market broke, not the underlying demand story. That distinction, observationally, is critical for how you read this chart. Screen, zoom out to show late February consolidation and recovery. Now, by February 23rd to 27th, silver had staged a recovery from the Rs 2.55 lakh low back to Rs 2.85 lakh, Rs 30,000 per kilo bounce in roughly 6 sessions. Price action in that zone showed 4 consecutive days of consolidation, which technically suggests the market was building a base rather than distributing for another leg down. By February 28th, MCX Silver had closed near Rs 2.85 lakh, and on March 1st, a fresh spike to Rs 3.25 lakh emerged amid new geopolitical developments. Screen, mark Rs 285, lakh support, and Rs 310, 315 lakh resistance clearly. So, looking at next week's setup, and this is purely observational based on what the chart structure is showing, the key levels to watch are Rs 2.85 lakh on the downside as immediate support, and Rs 3.10 to Rs 315 lakh as the resistance ceiling that held through February. The DXY's trajectory near 97.98 remains the dominant variable. If the dollar continues climbing toward the 100 level, price action historically suggests that silver could enter a prolonged consolidation phase. On the other side, any softening in Fed language or further dollar weakness could open the door for a retest of that Rs 3.15 resistance zone. Screen, show open interest data if available on platform. One more thing I want you to keep an eye on. Open interest. During the February crash, futures open interest contracted by 35 to 40%, confirming a massive deleveraging. A fresh rebuilding of open interest on a day where price holds above Rs 2.85 lakh would be the first structural signal that buyers are genuinely returning, not just covering shorts. All right, traders, that's the breakdown. The move from Rs 3.15 to Rs 2.85 lakh was a confluence of dollar strength, margin-driven forced liquidation, and failure at a well-defined technical resistance zone. Nothing random here. Everything had context. Keep the DXY on your second screen, watch open interest, and respect those key levels. The market always leaves footprints. Our job is simply to read them clearly. If this kind of data walkthrough was useful to you, hit like, share this with a fellow trader, and drop in the comments what instrument you're tracking next week. See you on the next one.